What is up, YouTube, and welcome back to another video on high altitude investing. In today's video, we are going to be talking about diversification and your portfolio. A lot of people are wondering, what do you do with your portfolio? Do you go all in on a certain coin? Do you diversify across a whole bunch of different coins? So we're going to talk about how to maximize your profits inside of the crypto markets in terms of portfolio management. But before we get started, if you're not a member of the free Discord, please click the link in the description box below and get started with the free Discord. And without further ado, we'll get straight into today's video. So, portfolio management. Now, a lot of times people like to have like 20 or even 30 coins in their portfolio, and then other people like to go all in on a single coin and hold that throughout the bull market and try to make as much profit as they possibly can. So the big question a lot of people have is, what's the best strategy? Do you go all in on a single coin? Do you hold like 20 or 30 coins? Or do you hold like 5 or 6 coins? So that's what we're going to be covering today. So make sure you stay clear till the very end of this video, because I think you're going to get a lot of value off what's being taught in this video. So probably the most common thing I see in the market is actually the opposite of going all in on a single coin. What most people are doing is buying like 20 or 30 coins, or maybe 10 or 15 coins, and they're trying to hold all these different coins throughout the bull market to kind of diversify their portfolio and really make the most money based on what they believe is going to be the best 20 or 30 setups. Now, this is a good idea in theory, and a lot of people think, oh, this has got to be the best way. Everybody's always told to diversify their portfolios when they're investing. But the truth of the matter is, there are some downsides to having 20 or 30 coins in your portfolio. Number one is tracking. If you have 20 or 30 coins in your portfolio, good luck keeping track of all of them. You're going to have a whole bunch of different exchanges. You're going to have Excel sheets. It's just going to be a pain to do analysis on all of those coins, to keep up on them, to look at the charts. That's going to be really, really hard. So tracking 20 to 30 coins is going to be very, very difficult. The other issue with this is shiny object syndrome. So a lot of times if you do this, you think, oh, well, here's another cool coin that somebody told me about on YouTube or Twitter, or that I found based on my own research. I guess I should just buy that one too. And you might be like, well, I've got all my money in these 30 coins. How am I going to get more capital to put in? And so you just sell one of your other coins to buy this other one. So if you have like 20 or 30 coins, you're just kind of like a mess right now. You know, that's like trying to start like 3 businesses at once, or having like 4 girlfriends. Like, you know, you're not going to be able to do that, right? It's going to be crazy. And so the best way to handle this is to not buy 20 or 30 coins at once, because you're just going to get confused. And so this is some of the downsides of having 20 to 30 coins, or even like 10 or 15 coins. 10 or 15 is a little bit more manageable and reasonable, but it's still going to be a lot of tracking, a lot of management, and a lot of work to pay attention to that. So that's some of the downsides to having that many coins. The other thing that happens a lot when you have 20 or 30 coins, or 10 or 15 coins, is the fact that a lot of times you're not taking enough time to find the best setups, right? Because you have so many of them, you're not really taking a lot of time to find the highest volume, the best projects, the best chart patterns. You're basically just shooting in the dark and saying, you know what, if I have a bunch of them, one of them's going to take off and I'll make a bunch of money. And that might be true, but in crypto, basically everything takes off. Like when bull markets start, almost everything goes up all at once. So it's not whether you have coins that are going up, It's whether you have the best setups, because some of those coins are going to do 50x and some of those coins are going to do like 2 times in value in the bull market. So really the problem is you're not looking for that best setup. So you just kind of avoid finding the best setup because you're just trying to find the first setup that you're just trying to find as many setups as possible just to try to diversify. And really what you want to do is look for the best setup, the best coins that you can possibly find and go for those ones. So those are some of the problems with trying to go for a diversified portfolio. And I know everybody always hears, oh, you're supposed to go diversified. But the truth of the matter is that if you're diversified in your investing, you're probably unorganized. Like even the best investors in the world really only have a few investments. Like Warren Buffett's is not that many stocks that he holds. And he has like big positions and just a few he really believes in. Why? Because he understands this exact principle that I'm talking about in this video. You really want to concentrate your investments, which we will talk about in just a second. And I know, I've made this mistake myself, but I've learned over the years that just going in on those best setups is really the way to make the most money in crypto. That's how you're going to print money in these markets. That's how you're going to make a bunch of money in crypto, is going for those best setups. And you can't do that if you have shiny object syndrome, if you can't even track all your trades, if you've got like 30 coins that you're holding. You got to concentrate your investments into some really, really good select few investments. All right, so let's talk about going all in. Now, there are some cases where going all in, I would actually tell people is okay to do. Like if you have a small portfolio, if you're starting with like just a little bit of capital, finding one super, super, super good setup that you really believe in, that the chart really looks good, can be a really viable way to make a lot of money in the markets. This is something a lot of people don't do. And if they do it, they go all in on some completely worthless coin that has no real potential or value. And so therefore they lose a lot of money. And I've made this mistake myself, either not going all in on something I really believed in or going all in on just some terrible coin. But I've learned over time that the best way to do this is actually to find those best setups, those ones you really, really believe in, that you know with a high degree of confidence are going to do really good throughout the bull market, and to go all in on those. So there is a select few cases where this is okay to do this. If you have a small portfolio, sometimes going all in on one coin really is the best way to make a lot of money in crypto. So that's one of the things, is if you have a small portfolio, that's a pretty good way to make good money in crypto. The other thing, you guys, about going all in is it's really easy to track. Like you can have one exchange or one wallet. And if you have a hardware wallet, then it's even easier. You can have self-custody over your coins and you don't have to try to track and manage all of these coins and buy it on exchanges and send it over and deal with all the fees because you're sending like 30 coins over from an exchange, and taxes and all of the stuff that comes with having too many coins. It's really hard to track. But if you have one coin, it's really easy to track. Now, some of the downsides of having all in on one coin is the fact that you're going to miss out on some of those other setups, because the idea that you can just do all of the research to find the one coin that's going to just completely explode, this cycle is pretty low. Like the probability that you'll find that one single coin, that's pretty low. So, you might miss out on other coins that are really, really good setups just because of the fact that you went all in on a single coin. And so that's one of the downsides, is you might miss out on other setups. Now, don't let that stop you if you have a small portfolio from going all in on a really good setup, especially if it's a shorter term play where you can take some of your profits and buy a couple other coins with your profits. But the truth is if you're all in on a single coin, you might miss out on some of those other setups. The other problem with going all in on a single coin is if you're wrong. Like you could be wrong, right? And then you lose all your capital. So if you're going all in on a single coin, the best thing to recognize is, first of all, find the best setups possible. And there is a chance that you could be wrong. But if you're right, you're going to make a lot of money because of that. So find those really, really good setups that you're looking for in the market. You might be wrong. You just have to accept that and be willing for that. If you're going all in on a certain coin, like one single coin, for example, that you really believe in. And that's where the research comes in. Make sure that that coin is a very high probability setup that you really believe in, that you really think is going to do really good. And if you can find that setup, then you can make a lot of money going all in on a single coin, but you still might be wrong. So just be aware of that. Be willing to lose that money and try again. Get more money in the markets and try again if you need to, right? You have to be willing. Whenever you're investing, even diversified, you have to be willing to lose whatever you're putting in. Like that's one of the first rules of investing. Don't trade money you can't afford to lose. You don't want to bet your house on it. You don't want to bet your farm or whatever you've got. You don't want to bet all your money. Maybe play high risk. That's the other thing. Scared money doesn't make money. So one of the benefits of going all in, or even just investing in general, is that high risk people that take high calculated risks, they're the ones that truly succeed in life. Those are the people that make a lot of money. So I know a lot of people want to be risk adverse, where they look at risk and they say, oh no. And risk management is a whole different other thing. If you want a video about risk management, comment down below. I'll make you one. But taking risk in life is how you get successful. That's how you can really be way ahead of the curve. That's how you can make way more money than you're making right now, is taking risk. Yes, you want to calculate that risk, but being high risk is actually a good thing. You want to take risks in life if you want to be successful. And you want to take calculated risks that are sometimes high risk, because that's how you're going to make a lot of money. That's just the truth of the matter. Think of Steve Jobs when he invented the iPhone. Like, he took some other ideas, some other technology that was already out there, but releasing an iPhone was super high risk. He was putting his entire company, literally risking everything to release the iPhone. And it turned out to be a huge, huge success and changed the entire world. So you got to be willing to take high risk in life. That's one of the benefits of going all in, is if you find those good setups, you're going to take those higher risk plays it's higher risk to be all in on a single coin, but you're going to have a bigger reward for it. So that's one of the benefits. Now, there's a happy medium between these two. And really, that happy medium is somewhere in the middle, right? There's the people that have 20 to 30 coins, even sometimes like 100 coins. And then there's the people that have like 5 coins, or 10 coins. And then there's the people that have 1 coin. And again, if you have a small portfolio, going all in on one really good setup is probably the right thing to do. But if you have a bigger portfolio, then you might want to be somewhere in the middle path. Because if you're too invested in too many different coins, way too hard to track, you're going to run into shiny object syndrome. It's going to be a big mess. Some of the ones that you think are going to do good are really going to pull back or not do as good percentage gain. It's going to be a big mess. And then there's the people that are all in on one single coin, which is okay depending on portfolio size. But if you've got like $1 million and you're all in on one single coin, and then that one crashes, that's pretty dangerous too. So somewhere in the middle, I would say like really the magic number is like 5 to 10. And if you're good at tracking and managing, maybe you can do a little bit more than this. But for most people, they're not. Like, I know for myself, like I do a lot better with less than more. It's a lot easier for me to think about it, look at the charts, and do everything with less coins rather than more. And for me personally, you would think that like I'd have super crazy knowledge about tracking trades and Excel sheets and all of those things. And to be honest with you, I don't. But what I do have is a lot of knowledge about charts, about what setups are going to be good setups, and about what coins are going to perform the best throughout the bull market. So working with my strengths, having less coins is optimal for me personally. And so that 5 to 10 coin range is really about perfect. And there's a lot of upsides to this because it's somewhere in the middle where it's still easy to track. You're looking for those better coins. You're not getting stuck in shiny object syndrome. You're not going to miss out. If you're wrong on one of them, it's okay because you've got other ones. That is really the perfect number, or the perfect range is somewhere in between these two, the extreme of going all in and the extreme of being overly diversified. Somewhere in the middle, that's where the magic happens. That's where the magic is, you guys. If you can get right here, and again, if you have small portfolios, you might want to be over here, but there's really no justification for being over here unless you have like the most brilliant tracking abilities on the face of planet Earth, unless you're like really good at tracking and organizing yourself and really good at finding the best setups so that those 20 or 30 coins are only the absolute best. But that's asking a lot of anybody, right? That's a lot to ask from anybody. So that's really not the place to be. There's almost no justification for it, maybe a little bit. But here in the middle, that's where the magic happens. That's where if you're wrong on a coin, you can make a bunch of money on other ones. You're not getting shiny object syndrome. You're finding the best setups. It's easy to track, easy to focus on, easy to do charting. That's where the magic happens. So that's really today's video. Be in the middle. Don't be overly invested in a whole bunch of different coins and overly diversified. And don't be all in unless you have a small portfolio and a really, really good setup and you're willing to be wrong about that. But in the middle, that's where you're going to make the most money and really do the best investing in crypto and trading these cycles. So that's my video for the day. If you guys want to learn more about this stuff, join the VIP program, lifetime VIP, link in the description box below, and get started with the VIP program. It's, we have a lot of different things in there, a lot of different setups. We don't get every single trade right, but the ones we do get right are super, super profitable, and you can make a lot of money being in there. So check out the Lifetime VIP program, link in the description box below. Thank you guys for tuning in. That is my video for the day. Hey, thank you guys so much for tuning in to today's video. I love and appreciate every single one of you. If you enjoyed this video, please do me a favor and share it with your friends. And I look forward to seeing you guys in future videos. As always, stay profitable out there.